So you want to talk elections. More specifically, you want to know how all the political back and forth might shake up your investments. Everyone's always wondering what a new president means for their money. And hey, it's a valid question. This time around, in 2024, what should we actually be watching out for?
Well, it's kind of like, trying to pick the Super Bowl winner before the season even starts, right?
Right.
It's anyone's game at this point. I can't tell the future.
No crystal ball.
No, definitely no crystal ball over here. But what we can do is look back at how the markets have reacted in the past and, maybe more importantly, break down the potential impact of each party's economic platform. What are they actually proposing and how might that trickle down to your portfolio?
Yeah, okay, so let's dig into that. But before we do, I got to bring up something that's always kind of bugged me. We often hear these historical comparisons like, remember when this president got elected and the market crashed, or remember when that president got elected and the market boomed. But can we actually rely on those past experiences?
Right, like using history as some kind of stock market roadmap. Yeah, it's tempting to look for those patterns, for sure. But here's the thing. It's never that simple, right? I mean, take the 1980 election, for example. Ronald Reagan, he sails into office, and initially, Wall Street, it kind of freaks out.
Yeah, I vaguely remember that.
Right. Investors weren't exactly thrilled with his proposed policies at first, but then the market does a complete 180, takes off like a rocket during his time in office.
Which just goes to show one election doesn't necessarily predict the market's future.
Yeah. Exactly. Each election happens in its own unique context. What flew in the 80s might crash and burn today. It's about the bigger picture, not just who's got their feet up on the Oval Office desk.
Okay, so let's talk about the here and now, 2024. What are some concrete policies being tossed around that could actually move the market needle? I'm talking about stuff that has investors hitting refresh on their trading apps.
Well, let's take clean energy. That's a big one. A lot of the Democratic candidates are pushing hard for major investments in renewable energy sources. Think solar, wind power, that sort of thing.
Right, and they're talking some pretty substantial tax breaks for those industries, too.
Exactly. Now, if those tax breaks do become a reality, you could see some serious growth in those sectors. I mean, suddenly investing in a solar company becomes a whole lot more attractive, right?
It makes sense. But let's be real. More green energy often means less reliance on things like oil and gas. Not everyone's going to be happy about that, are they?
You're hitting on a major point of contention there, because on the flip side, you have some candidates, particularly on the Republican side, who are all about deregulation in the energy sector. They want to streamline the process, cut the red tape, and ramp up domestic oil and gas production.
So instead of tax breaks for solar panels, it's a free-for-all for fossil fuels.
Well, not quite a free-for-all, but you get the idea. For investors, this could potentially translate into some short-term gains for those traditional energy giants. At least, that's the hope.
Okay, so depending on who snags the presidency and which policies actually make it through the gridlock in Washington, we could see some major shifts in the energy landscape, to say the least.
Absolutely. And that's just one sector. We haven't even touched on things like healthcare, infrastructure spending, all those things that get investors excited or nervous.
Okay, hold on. Before we move on, we have to address the elephant in the room, right? Taxes.
Oh, yes. The dreaded two words.
It's an election year staple, always up for debate. So let's say, hypothetically, a candidate, maybe on the more progressive side, campaigns on raising taxes for corporations and, the ultra-wealthy. That's a pretty common theme, isn't it?
It is.
So where does all that extra tax revenue actually go?
Well, ideally, it's used to fund social programs, bolster the social safety net, maybe tackle things like infrastructure projects, even chip away at the national debt. That's generally the pitch.
Sure, but, I have to ask, wouldn't raising corporate taxes potentially eat into their profits? And wouldn't that, in turn, make those companies less appealing to investors?
That is the million-dollar question, isn't it? It's the core of the debate, really. Some economists, they'll argue that, higher corporate taxes, they could stifle business growth, make companies hesitant to invest, and that could trickle down to the stock market.
Makes sense.
Others will argue that it's about the long game, that a more equitable society, a stronger social safety net that benefits everyone in the long run, and ultimately, that's good for the economy as a whole.
Right, so it's about short-term impacts versus long-term vision, a classic dilemma.
Exactly. There's no easy answer.
Okay, so we've got the energy sector potentially doing loop-de-loops, the tax man looming, and, oh yeah, did I mention that a global crisis could hit at any moment and completely obliterate all of our carefully crafted predictions?
Yeah, let's not forget about the wild cards. Black swan events, those unforeseen curveballs that life throws our way, those are the ultimate market movers. And I hate to say it, but a pandemic, a war, even a major tech disruption could send shockwaves through the market, completely derailing everything.
So where does that leave our listeners? They're probably listening to all of this thinking, okay, what am I supposed to do with my money right now?
It's tough. Look, the absolute best thing anyone can do, and I know this might sound like a cop-out, but it's true, talk to a financial advisor. A good one will sit down with you, figure out your risk tolerance, how long you plan on investing, what your goals are, and then help you build a portfolio that aligns with all of that. That's something we can't do for you.
Couldn't agree more. Get that personalized advice. But to kind of wrap up everything we've talked about today, I think the key takeaway is this. It's not just about who gets sworn into office in 2025. It's about the policies they champion, how those policies actually play out in the real world, and which sectors they impact, for better or worse.
And hey, here's something else to think about. While everyone's busy obsessing over the presidential race, remember, Congress plays a huge role too, right?
Oh, absolutely.
The party that controls the House and the Senate, they have a lot of power to either help or hinder a president's agenda. So as you're doing your research, figuring out where you want to put your money, don't forget to factor in which way the congressional winds are blowing.
Great point. All right, folks, there you have it. Elections and your money, a complex dance, but hopefully we've given you some move to impress your portfolio.